Hello, I'm Don Sull, a professor at MIT Sloan School of Management and co-founder of Cultrex, and joined by my co-founder and co-host, Charlie. Today, we're delighted to speak with Craig Kliethermes, the CEO of RLI. So Craig, first of all, welcome and thank you so much for joining us today.
Thanks for inviting me.
So RLI, in 1961, Gerald Stephens founded Replacement Lens, Inc. to offer a new kind of insurance policy that covered the cost of replacing contact lenses, which at the time were quite expensive. As the price of contact lenses fell over time, demand for insurance fell as well. But that wasn't a problem for RLI because they had already diversified into other niche insurance markets. Today, RLI offers dozens of highly specialized insurance products across a wide and diversified range of niche markets, all of which are unified by the fact they're filling unmet customer needs. And this steady stream of innovation, starting from insuring contact lenses to the wide range of products they offer today, has generated terrific financial performance for the company. So RLI over the past 5 years has delivered the highest revenue growth among specialty insurers, which is the horizontal axis on the chart we're showing here, and is at the top of the industry in terms of return to shareholders, the vertical axis. So RLI attributes much of the company's success to great people and its distinctive culture, which they capture in the tagline, "Different works." And for sure, it's the case that employees love the culture. So they voted RLI one of Glassdoor's best places to work for 4 of the last 6 years, and other publications like U.S. News and World Report have recognized the company as a great place to work as well. At the heart of this culture are 5 core values that we're going to talk through with Craig today: ownership, customer focus, drive, innovation, and integrity. And as frequent listeners to our podcast will know, one of the things when we're looking at cultural champions, we're looking for 3 things. 1 is the culture working for employees. 2 is the culture helping to drive economic value. And 3 is the leadership team and the organization intentional about the culture. And the way we measure that is the extent to which the stated core values are lived on a day-to-day basis. And so in terms of kind of assessing intentionality for RLI, we analyzed more than 50,000 employees and how they describe their company in Glassdoor reviews for 45 insurance companies. And what we basically found was for all 5 of the RLI values, the RLI employees were much more positive than their counterparts in other insurance companies. So just to show one, ownership, which we'll kick off talking about. What we're seeing in this chart is that RLI employees talk about ownership, their sense of ownership, their empowerment, their sense of accountability about twice as frequently as the average counterpart in other insurance companies, and almost 4 times more positively. And we could go through charts for each of RLI's core values, and we see the same pattern emerge: is that it's not only that employees love RLI's culture, but they're very positive about the specific attributes that RLI emphasizes in their core values. So, Charlie, with that, I'll turn it over to you.
Thanks, Don, and thanks, Greg. It's a really remarkable culture. We've had so much fun analyzing. It's kind of off the charts on almost everything. It's very impressive. So I guess our first question is, what kind of person thrives in a culture like this, and what kind of employee is a poor fit?
So first of all, we want people that will value our culture of ownership. And our culture of ownership is really not, I mean, I've worked at a lot of places in my career, and I know every place will ask you or request of their employees to act like owners, be like owners. But this is the one place where every employee, after they've been here 1 year, actually is an owner. They actually have shares of RLI stock through their retirement plan, through our ESOP program that was created over 50 years ago. So the type of employees we want are the people that not just talk about ownership, but actually going to act like an owner. They actually want to, it's almost as if they want to be an entrepreneur that gets to make more decisions and control, I'll say, have more control of their own destiny. We like people that are humble, hungry and smart, as you know, there's a whole book written around that. But humbleness, genuineness, authenticity, those are things that we hear a lot from external people when they deal with our internal people. That's how they feel. That you know what we say, you know, our word is our bond. We try to deliver on any promise that we can make. We're not salesy type people. We don't promise more than we can deliver, or promise something and then try to rush to figure out how we're going to deliver where we've overpromised. We really look for people that value deferred gratification. And I know that term is used sometimes, but people that are looking to, let's say, make a difference over the long term as opposed to a quick hit and make a quick buck in the short term. We feel like a lot of the people that come here can make a lot more money or build more wealth over time than they can anywhere else. But if they're looking to make more money in this next 1 year or next 2 years, because they're either compensated on how much they grow or how fast they can do something, this is probably not the right place for them. We look for people that are smart. Everybody looks for people that are smart. We actually had our founder actually used to have when he created this company 60 years ago, he actually had a rule. He was always looking for smart people that were self-motivated, wanted to make a difference, willing to learn from other people. So not they're smart, but not coming in and think they know everything, that they know they can learn from other people and other people's experiences. And so they're always constantly looking to improve upon what they know, which also means they're a little bit more willing to be challenged by people. They don't have giant egos, which kind of goes back to the authenticity and humbleness, is that they know they're smart, but they also know that they don't know everything, that they can learn from other people. And then he kind of wrapped that, you know, you get smart people, giving them, making sure they were willing to be challenged, and then create an environment of continuous improvement. And then you kind of wrap that in an ownership 10 years later when he created the ESOP in 1975, and actually made people truly owners of the company as he became more of a publicly traded company. As far as I know, we're the only ESOP publicly traded company that's an insurance company anyway. So when you see the high scores for ownership, I'm guessing because a lot, and I worked for at least one of those companies that was actually very high up on the list. And I could tell you, they said act like an owner, and they did have ownership amongst their senior leadership team. They distributed ownership, but ours is all the way down to an entry level position. So it could be a person that's converted from an intern to a full-time employee. And once they get to the end of the year, their first full year, we give them as part of the retirement plan, part of their retirement plan is an ESOP, which we give half of whatever we contribute goes into RLI stock. So what it ends up resulting in, we have about 1,100 employees, and we have over 50 people that have over $1 million in their ESOP program. Now, this doesn't count up their 401k, because we also have a separate 401k for them where they can direct. But this ESOP is all in RLI stock. So we have 50 people in our company, current employees, that have over $1 million. And that is much more correlated to their tenure with the company than it is with the seniority of their position in the company, which you can imagine. It creates a completely different environment, because it's not a well, what title does that person have? It's more of, this person has a significant portion of their wealth tied up in this company, so we should probably listen to their questions, and we should feel obligated to answer their questions, and maybe obligated to listen to their perspective to things. We also have a couple hundred other employees that have over $500,000 in their ESOP program. So it's very widespread. Every employee after they've been here a year is truly an owner. And it just changes the way that people act. They feel like they want to contribute. They want to ask questions. They want to understand their investment in the company. They want to understand things that are maybe outside of their area of expertise because it may have an impact on their net worth. It just reinforces that environment that you get people to ask questions. They feel committed to trying to make the place better. They feel committed to trying to make the best decisions for the long term of the company. And it just reinforces everything you really want out of your employees, that maybe it's harder to get at other places because they don't have such broad true ownership in the company.
If I could just jump in, Craig, I mean, why, given what you said, which is exactly right, every company talks about how they want employees to act like owners, and that makes perfect sense. Most companies, many employees in many companies do not really feel a sense of ownership. Why do more companies not do this? What do you think in insurance or more broadly, what do you think keeps companies from saying like, well, RLI is onto a great thing.
Yeah.
Let's do it ourselves.
Well, we hear it a lot. We hear it a lot that people would like to emulate our culture. Our culture is there's so many things that are interwoven in the culture. It's hard to deliver one. And I'm not going to say the first year that Jerry Stephens created the ESOP program, it necessarily, it doesn't start to click immediately, right? It takes some time to build value over time. I think a lot of times you put, when I get every other place I've been, it feels like the people at the top of the organization need to make all the decisions, right? It's like, well, I'm getting paid more than everybody else. I have some level of accountability that other people don't have, right? Because I'm ultimately going to either get a raise or get fired based on the decisions. That's what usually happens at most companies. The top people take all the arrows, which you should, but they also a lot of times feel obligated then to make the decisions. And I think some of it's ego, I'm sure. Some of it's ego, some of it's a need for control. What got you there is what you should continue to try to do. I think you feel like, well, I make a lot of money. I ought to be making all these decisions because I want control of it. Because if it goes wrong, I want to be able to explain, or explain why I made the decision. And I think, but once you create an environment that everybody has a vested interest in the outcome, it's a lot more, it's a lot easier to push the decisions, I'll say, closer to where the problem exists, closer to where the customer is, closer to where the process owner is. And honestly, those are the people that have to live the problem every day, that are trying to fix things and make it better. And as long as you all agree about, what kind of parameters need to be, if it's truly going to change our reputation in the industry, then we probably ought to get the top people more involved. And I may have to get more involved to help set a framework to solve problems. But the bias on everything is, for me, is okay, let's get some of our smartest people involved that have been around for a while, and let's get them in a room and let them talk through the pluses and the deltas of the path we should go down. And because I think most of the people believe in our overall risk framework, we try to manage downside risk. Part of that's because everybody's an owner, everybody has significant net worth. We don't want a lot of negative surprises in our organization because it has a definite impact on mood. It has definite impact on the net worth of every employee out here. So we try to get a broader group that's closer to the action involved, and to understand better what the reaction is going to be to that kind of decision, both from our employee base, but also from our customers. And I think one of the things I left out earlier is, we try to find people that are more service orientated, that want to build personal relationships, customer orientated. Those are some of the type of people we want on board as well. Obviously, when they come through the door, we think personal relationships still matter in our business because we are selling, insurance is a promise to pay something later in case some negative event occurs. And obviously we all hope that doesn't happen, but you got to kind of trust that the company's going to step up and do their part. And so we really believe that personal relationships and trust are critically important in our industry. And we try to find people that value that. So that's a lot of what we try to do, and it builds by trusting people, building relationships with people. I think people are more willing to challenge each other because they built a personal relationship with people. So now it's not like hey, go stay in your lane, which is what most companies are like. It's like, hey, this is my area of expertise. You kind of stay to what you're good at. I'm gonna stay to what I'm good at. And it breaks down a lot of barriers, natural barriers that are created in a lot of companies, because it's like, well, I'm the expert in this space. Don't bother me. And we're more of, okay, let's break down those barriers. Let's help people understand your business, what these people do, because we think we get to better answers. We could solve problems faster. We have a greater willingness to help each other out. But also we feel obligated to listen to each other because of that common ownership that we've created. And we also try to create, I'll say a family environment, but we're connected, like all family. We don't like everybody in our family, but we find a way to get together from time to time and try to listen to each other. But we think it's particularly important in a world post-COVID that you're being very intentional about getting together. So we bring people into Peoria, which isn't the easiest place to get to, Central Illinois, about 3 hours from downtown Chicago. We have people come here for new employee immersion when they become employees within the first 6 months. We try to get them to come to Peoria. We introduce them to all the functional leaders. We have some of the product leaders that work here. They get up and talk to them. They do some fun things together. They spend 2 or 3 days together, get orientated about the organization. We talk to them about our culture. We talk to them about our history, how our company was started. And we do a lot of other training here in Peoria. We bring each one of our products. You saw that big list of products, but we have them all come in different times of the year, and they go through the profitability of their products. They also go through their strategy around their products. Again, another opportunity to build relationships with other people that they don't see on a daily basis. We do recognition banquets. So every year we bring people in after they've been here 10, 15, 20, 25 years, and we recognize, that that their years of service with the organization. They bring spouses in for that. We try to make it it needs to feel like a family, that's connected by common financial interests, I would say. But we'll also go to them, whether it be holiday parties, because we have about 20 offices spread out all over the country. We'll go out to producer events. We'll go to their office, make a point to do some things. They have holiday parties that we try to make a point of going to. Have 3 or 4 executives in the home office go out there so that they know who they are. We try to create a feel that it's a flat organization, that you could meet the CEO or COO of the company the first day you join the company. You could be in a meeting with them, and that we try to show them that we're regular people that are willing to listen to people. We don't have all the answers. We expect something of them when they come new to the organization. One, to challenge us, to ask us questions. Why do you do it like that? It stretches us. They bring us new relationships. They have new ideas, things that have worked at other companies that could work for us. It just constantly stretches us every time we bring new people in the organization. And then, also try to immerse them into our culture as well. And, we think it's particularly important to break bread together, just like you would as a family. You got to break bread. You got to build relationships and trust with people. And I think you'll get to better answers. People are willing to challenge each other, talk to each other, open up a dialogue if they disagree. And I think that gets you to a better answer. So it's not just all it's all in a vacuum, all in a silo, because it's easy to think you're the expert. It's why you're getting paid to do that, and you ought to make all the decisions. We think it's good to listen to other people. So, especially people who have a vested interest in the outcome.
And then Craig, as CEO, what are the most important behaviors that you personally need to role model to reinforce the culture?
So I think you got to be first, you got to be transparent with all your communication, right? We try to share as much information across the organization as we can. Now, as a publicly traded company, we can't share every piece of information if it's not available to the public. We have to be careful with that. But we think keeping people informed, good and bad. I mean, it could be something that's not going particularly well. Um, but share as much information as you can with people, because remember, if you're pushing decisions down to them to make to make those decisions, and they're not going to be elevated to me for most things, you need them to have as much information and context, situational awareness to solve problems as possible. So I think transparent communication is probably number one. uh, you know, constantly live what we say we want them to do. I think it's very important to have consistency between what we say we want people to do, deferred gratification, do the right thing for the long term. Those type of words are great, but if you're doing something else, or they see you doing something else that's inconsistent with what you've asked them to consider when they make decisions, then that's a problem. So you've got to live the values yourself, right? They've got to see you doing the right thing for the long term, for the customer, for the company, for the employee base. Um, I think it's important to make sure you continue to live the values, and continue to hold the bar very high for the type of people that you hire. Make sure that they're smart people, that they're disciplined, that they make rational decisions. And make sure you surround yourself with people like that. And I think you got to continue to make sure that people know that much is expected of them, right? I mean, there's a lot that's expected of them, but because they are owners of the company, and we want them to challenge each other. We want them to make good decisions. We want them to make good decisions for the long term. We want to build value for our shareholders, in alignment with them over the long term. And I am very purposeful in how I refer to all of the people that work at RLI. I've referred to all of them, and you can see it in our earnings calls. You can see it in any time I write. I call them owner associates, because they are owners and they are certainly associates. I don't really view, I don't view that I'm here and they're here. I view that these are associates. They add value to they all have customers, whether they're outside customers or internal customers. And they're all here trying to build value for the organization. So I think the other thing you have to make sure you reinforce with your management team is that, part of their job is to connect dots for these employees. And, I talked about sharing information, but I could share it at a high level about the financial performance and what we want to do in it, but that's pretty high. You got to keep moving it farther, push it down, like how that person can make a difference in their job, how their job is important to the end customer. Why is it important to, I'll say, complete this spreadsheet in an accurate way, and also make sure the calculations of the spreadsheet are accurate, because we're going to make decisions based on this. And what does that mean? Okay, well, that decision is going to affect this part of the process, or that customer directly, or whether we grow or whether we shrink, whether we're profitable, whether we're not. It's going to affect the type of decisions that we make. And I think it's critically important to constantly connect people with why their job makes a difference in the organization. What is it doing to make us better? It's motivating, right? As an entry level employee, I remember, I used to the best advice I ever got was my boss said, if you don't understand, ask why this is important. Why are you doing it? Because it made me want to come to work every day and not just like, okay, I got to go type these numbers from here to here. I know people don't do that anymore, but we used to do that a lot. And, but why was it important that it was accurate? Why was it important that it was timely? And they would tell me, this is what we're going to do with this information. And then this information is gonna be put in front of somebody else to make a big decision about whether we're going to get into a business or not, or close that business down. And boy, that made me want to come in and do a better job. It made me want to make sure it was done on time and done accurately. And, whereas, it's easy just to put your head down and say, oh, I don't know, my job is just to do this until lunchtime. And then I go back and in the afternoon, do it again. I wanted to know why it was important. And I think that's important to make sure you share that with people. So, yeah. I mean, a lot of the stuff that we do, I don't think it is not rocket science. It is common sense. But a lot of people, for some reason, forget common sense as they maybe as they move up the ladder. I don't know. It's like, or just do it because I told you to. I mean, that's like the last thing we would want to tell somebody. Don't do it because we told you to. We want you to do it because it either adds value or it's doing something to help us grow our business profitably and serve our customer.
So to me, the culture kind of sounds like a two-way street. On the one hand, you have all these things that employees everywhere crave, like meaning, authenticity, transparency, kind of this sense of family almost, of ownership, very attractive. But on the other hand, it's very clear that things are expected of the associates. So what happens when the associates don't meet these expectations?
So the first thing we try to do is make sure, one, that we look at the decision that was made, and one, is it a rational decision, right? Did they make decisions consistent with what we were asking, right? Is it rational? Did they have good information? Did they have the best information they could to make the decision? There's no decision that's a yes, no, hardly ever in our business that's completely, it's an obvious they should have went this way when they went that way. It's not a light switch. It's like, well, I have this much information that says I'm going to be 70% chance this is the right answer, 30% chance it's not, right? And so you don't really want to punish people for the decision unless it's an obvious something that is against our values. Let's say it was not done with integrity or whatever, but let's say it was done inconsistent with all our values. It was just turned out to be a bad decision. The thing you want to do is your first question is not how could you have made that decision. The first question is, well, what was the result of the decision? So we have to make sure that is maybe it's not what we wanted. What was the outcome? And then you got to start asking yourself, well, what did we learn out of this? And is there anything we could salvage out of this decision? And how would we do it better next time? So it's like a lessons learned discussion. What can we do differently next time to get a better outcome? Because usually it's hardly ever in our business, it's hardly ever one person's fault. It's usually there's always what I find as you move throughout the organization and you hear different perspectives. Everybody comes to you with their perspective on why things failed, but guess what? It's hardly ever the same. So the answer is usually in the middle somewhere. There's always more fault to go around than one person. So you want to figure out, well, what can we do as a system, as a process to make it better? And so we talk about that. We have a regular process around lessons learned. Even when we think it's a success, what could we do better, right? Even when you succeed, you could do better. Because maybe it didn't get done. We could even cut more time off how we got this done. So we want to focus more on what we can improve than whose fault is it? Because usually the fault is more than enough to go around. And then once we figure that out, we also try to leverage and communicate. Like we want to be very, very transparent. We just had one where we had started down a path of a computer system we were going to put throughout the organization, and we spent probably 9 months on it, and we started to realize, going down this path is that nobody could visualize success anymore, right? And I could tell you in a lot of organizations, it doesn't really matter. If once you've got this much sunk cost in something, people want to check a box. They want to say, well, but I got it done. And even though when you get done, it's nothing like, it doesn't produce or deliver the things that you originally hoped it was going to do, but you got to check the box because you spent the money and now you got it done. And now everybody has to use some imperfect process or system. But I give credit to our people. We stepped back. We had a group of people, not just our technology people, but the business people and the people that were the project management people, and they just saw that they could not see success at the end of this project anymore. And I gave I mean, it's not fun to say, well, I lost, there was $5 million I might have wasted here because we're not going down that path anymore. But you have to think about how much money you would have continued to waste and time you would have continued to waste to go down a path if you weren't going to see success at the end. And I give them credit. They basically had a go, no go decision. They came to me. They said, look, we voted no go. And here's why. And there was plenty of organization wasn't ready. We weren't as strong in one area as we thought. But our vendor didn't do as good a job, but it wasn't all pointing fingers at the vendor, because it's easy to point fingers at other people, but we have to take some accountability ourselves. And what do we do better before the next time we want to go down this path and invest in the system? What do we have to make sure we have in place to succeed? And I had at least a dozen ideas of things we needed to improve to be ready to go next time. We also did a town hall for the whole organization and explained what were those things that we didn't have in place that we needed to have in place. What do we need to do better? Why did we make this decision? Because one, they're all owners, so that, I'll say $5 million. That's not the number, but that $5 million is money that was some of our employees' money too, right? Because they're owners. And they needed, but it was important for them to understand this is the type of thing we need to have in place to succeed next time. And also to tell the team that, guess what? If you see this happening next time, we'd like to make sure we try to stop this even sooner, right? So we waste even less money next time. And it's okay to raise your hand and say, I'm not sure this thing's on the right path, right? And we're not going to be successful if we keep going down this path. So sometimes you have to backtrack on the path before you can get on the right track. And I could tell you that behavior is one, you've got to reinforce it in your organization that people are willing to do that. And when the CEO is willing to stand up and say, look, am I happy about it? No. But am I happy that we learned something out of this and I'm pretty comfortable we're not going to make the same mistake next time? Yes. And am I really happy that my people were willing to raise their hand and say, it could have been easy to put their heads down and just continue down the path, and 9 months from now, and let's say $10 million more down that we wasted, that that they would have continued down the path, but they were willing to stop and say, we aren't going to be successful. We've got to reevaluate this. This isn't the right solution for us. And to be able to do that is really hard, because once that momentum gets going and once that sunk cost is gone, they're like, I don't want to be the one that has to raise my hand and say, I wasted money, I wasted assets of the organization, I wasted time. And you've got to be able to reinforce that with your team, that it's okay. It's okay to fail. You don't want to fail without learning something. We refer to things around here as successful failures. You want it to be a successful failure, right? And successful failure is where you learn something that you're going to do better the next time, and you're not going to make the same mistakes again. So that's the kind of behavior you have to model for people as well, and make sure that they know it's okay it's okay to fail as long as you're learning. Now, you don't want people to fail, do the same things wrong 3 or 4 times in a row. That's not good, and that's not going to be acceptable either. It's not just going to not be acceptable by me, it's not going to be acceptable by their coworkers. So we want to make sure that they're, that they're things we're learning from.
I'd love to just dig in a little bit more to the example you gave of the team coming up and saying, look, we kind of voted and we decided it's better to cut our losses here, because, in many companies, employees are reluctant to innovate or experiment because they don't think it's safe to take risks, right? And in insurance in particular, I mean, that's an industry where it's all about managing risk. And so, it has the reputation, rightly or wrongly, of being, the industry as a whole, not RLI specifically, quite conservative when it comes to risk. So how do you help the employees, maintain that willingness to take risk and experiment, which has been crucial to your growth? You don't go from, a single product to the wide range of products that you offer today without people experimenting and trying things. And, sometimes they work and sometimes they don't work. How do you maintain that willingness to take risks and to experiment in an industry that's, traditionally quite conservative around risk?
Yeah, I mean, I think, you got to be comfortable that you have good people. And you also have to be comfortable that you're solving a real problem, that it's not a manufactured problem. I feel like we have a group that's called an innovation group that we created, I don't know, 3 years ago, I think. There was a lot of insure tech that came into that was impacting our businesses, and we wanted to lean into that, but we want to lean into it in the right way. So I could tell you, most companies would go out and they would hire I'll say a hotshot from one of the big tech companies or whatever, and say, okay, we want to completely have somebody with a completely fresh perspective. But what we find is in our organization is that we want to be solving real problems too. So we actually put a person in charge who actually has a claim background, but a very innovative mind. And he created an innovation group. And his advantage was he had been with our company for about a decade. He had been in a couple different roles. He knew our business. He knew the people in our business. So he's already built personal relationships and trust and some knowledge about our business. And he's actually trying to solve real problems, right? Not a made up problem, not a problem. A lot of times we see cool technology and we're like, okay, we should figure out a way to adapt this cool technology to solve a problem, but we don't really know what problem we're trying to solve. And I think our organization says, well, what problem am I trying to solve first? So it's a real problem. So you get more people on board. Um, they we have a lot of tenured people, so they don't want to waste money. But they also know that you have to continue to take risks to continue to grow. You have to, if you don't take risks, you're not going to increase the value of the company, right? There's no return without risk. So you have to continue to invest in things and take some risks, but we prefer calculated risks. We prefer them in more small test cases, and then we will spread it throughout the organization if it works. Let's work out the kinks first, because otherwise it's really disruptive for the organization if you try to go really big, right? It's not, we're like the opposite of if you build it, they will come. It's right. We're trying to like build in a small place because it's a real need. And now where else can this need be? Where else can we solve problems with this solution? But we want to find things, real problems we're trying to solve for either our customers or for our process, or more information to make better decisions. And try to focus on those things that are going to make a difference and make us better as an organization. And you got to listen to your customers, and the customers, like I said, could be internal or external. So if you're trying to solve a customer experience problem, you need to be talking to external customers for the most part. Or there are internal customers that you're trying to make us more efficient to do things. So you got to do both. And you got to try to get smarter. And I think, and then, we've got to be willing to, again, you asked that question about failure. You got to make sure you're not, beating people up for failure. You're talking about what did we learn from failure, right? Otherwise, as soon as you beat somebody up for the failure, they're never going to take another risk, right? Because nobody wants to be called out for failing. So you got to make sure you do that, and I think you got to do it within the risk framework of the organization, which I think we do a pretty good job of communicating to everybody about the type of risk we're willing to take. We're very conscious of our reputation in the industry as producing good results over time, consistency of results. So we don't like to take these outsized risks. But I mean, it generates new ideas. And then when you have new people that join the organization, we have about, since COVID's started in 2020, we probably have 45% of our employee base has started since then.
Oh, wow.
So that's a lot of new people to integrate, but that's a lot of new ideas that come to the table too, right? A lot of people that are bringing different perspectives, different experiences, different knowledge to us, different relationships to the table for us that we can build upon. So I mean, we never assume that we have the sole. I mean, we think we're one of the top performing companies, but there are other models that work for other companies. The ownership model has worked tremendous benefit for our organization, might not work other places. but it certainly has worked for us. But we also acknowledge that there are a lot of things going on out there that are better than the way we do them today. And you've got to be willing to continue to improve. And the one thing you have to have is people that realize that if you don't continuously get better, you're not going to stay at the top of the heap, right? There's always people out there trying to knock us off the perch for our reputation as being a better performer, a more consistent performer, a unique culture. And we've got to continue to stretch and adapt to the world around us, because what's worked in the past may not work in the future. Although we also want to stay true to the core tenets of our culture, that we don't think change, but they do adapt and evolve over time, and we got to get better. And that's a culture that we always ask is, like I said, with not just with failures, but even with successes, what could we have done better? And we succeeded. Okay, we checked the box. We did good this year, but what could we even done better? And a lot of people say, well, you did really good. You did better than 90% of everybody else. Why would you want to ask yourself that question? But you don't stay on top if you don't continue to try to improve, because everybody else is trying to improve. Everybody else is trying to knock you off. Everybody else is trying to gain that same reputation that you have. And it's important to get better. So.
You're preaching to the choir with Celtics fans today.
Yeah, well, I was unlucky, but yeah.
Yes, that is a painful lesson that we have learned. Charlie, what was your question?
Yeah, so in terms of constantly evolving, how is the culture itself currently evolving? Particularly, has anything changed with how you think about the culture and the advent of AI over the past couple of years?
Well, we certainly are looking at AI and investing in AI in small ways. How does it improve? I mean, as most people think it does improve some basic things. I mean, some of our communication we can use, some of our technology people are using it to build base code. Some of our marketing communication group is using that kind of information. We started using it from a data perspective. I was even a little set back by I think we dumped our some of our largest claims from one of our product into ChatGPT, the newest version, and we asked it for how would you what are the things that would help us get better results, and it actually offered up policy changes and things like that. We were a little set back by that, so that it opened up other ideas about what we can do with it. And because we have this innovation group that spends a lot of time going out, and a lot of people are stuck in their day-to-day job, and they don't spend a lot of time. They don't understand what can be done. They understand the problems that they have today. So our innovation group is really there to help them talk and connect and say, okay, what's the problems you're trying to solve? And then they're off trying to investigate to see if any of the new technology can solve those problems for them. Otherwise, they spend time vetting. There's so many vendors. There's so many different insurtech companies that say they have the answer, but a lot of people, a lot of it is promotional. It looks good on paper, but then when you try to implement it, it's not quite as good as you think it is. So we have our innovation group going and looking and digging into that and doing a lot of the test cases to make sure that it actually does work. And then if it does work, we start to promulgate it throughout the organization. But we're investing there, and we're constantly trying to get better at those things. So if anybody, if there's ever any ideas, if anybody is exposed to anything they hear about or whatever, we have them go to our innovation group and ask them to do some investigation to see if this could be a tool that would be helpful for us. And and like I said, they have a lot of credibility because they are long tenured employees within the organization who've worked in different aspects of the organization and have built relationships. And they're not all into wild goose chases or just cool technology that doesn't really have doesn't solve a problem for us.
And I'm curious with this, it's such a striking number that 40% of your employees have come on board post-COVID. I mean, how do you, with such a large influx of new employees, And going back to what you said earlier, kind of the ESOP takes time. It takes time for the culture to be embedded in organizations. It takes time for people to acculturate. What kinds of things have you found helpful in um, getting those people on board with the culture and helping them to understand how you do things and get into the kinds of habits and behaviors that you'd like to see?
Yep. So I talked about the employee immersion, so we try to do that very early. We also, HR works with our managers to make sure we have good onboarding for their job, because sometimes they're remote. We have we had about 20% of our employees that were remote prior to COVID. We probably have closer to 30% now. And it's particularly important that it's not just an onboarding process corporately, it's also an onboarding process for our managers. And I think the other thing that helps with culture is we say this a lot, but the culture isn't driven by the top people. It's side by side and bottom up. So it's the coworkers that might not even be supporting the same function or the same product, but maybe they're co-located in an office, or they get together. We even have, like in Denver, we have a group of people. We don't have an office in Denver. Almost all the people in the Denver area we have hired since COVID, but we had a handful out there before. But they actually, one person took the initiative, and I think it's once a month, they get together at like a Starbucks. All the people come from different areas, and they sit there all day and spend together. But they're not in the same business. They're in different businesses that you laid out there, but they are in a common culture. And some of that is I count on this a lot, that this side by side reinforcement of our culture. What's the RLI way? That's not just me preaching it. It should be people living it, and it should be the people that are living it. It's okay to, HR hates it when I say this, but put your arm around their shoulder and say, hey, this is kind of the way we do things at RLI. It's okay to say no to a producer if it's not the right thing to do. Don't feel pressured to grow. You should be doing the right thing. We want to be in this business for the long term, and to be in this business for the long term, we have to find a way to make a little money while we're serving our customer. Otherwise, we won't serve our customer any longer if we don't make any money. And it's okay to say no to producers that are trying to ask you to make exceptions. Do the right thing, and then we wrap it in a compensation plan as well. Obviously, that's very aligned to financial results. We try to tie their compensation plan as close as possible to decisions they make. So within certain businesses, their bonus plan is almost exclusively focused on the results within the business that they're operating in, that they're underwriting, and that drives them to try to get the best outcomes for that business. So it also reinforces that, this same thing happens in all the big companies, happened in everyone that I've worked at before. It'd be like, you're in this business unit, you're very successful, you knock it out of the park, but some other business has a significant problem. So the overall corporate results aren't that good. So that impacts your bonus. We try to cut that out. We try to make it like, if you're in the surety business, for example, your results are based on the surety business that you're in. And these other people that write other things that you don't control, that you don't have any input on, and they work in an office, thousands of miles away, that you're not paying for maybe the bad year they're having. And it really reinforces all that alignment that I talked about before. The ESOP even that I talked about, that everybody creates the ownership, that is based on the results, the financial results of the company. The amount we contribute to the ESOP is proportionate to the financial results of the company. So if we don't have a good year, that number goes down. The amount we put in their ESOP goes down. If it's a great year, it can go up to as much as, I guess the max that we could put in ESOP is 9% of some people's pay, because we put half in an ESOP and half in a 401k. And that's also, the 401k is also tied to the financial results of the company. We have a 3% safe harbor, but everything else is based on the financial performance of the company. I would also add, not really part of your question, but what reinforces that longer term thinking and that results matter is that over the last 20 years, we have averaged putting 15% in people's retirement plan. 3% is safe harbor. They don't have to put a dime in themselves. And 3% is safe harbor that goes into their 401k. The next 3% goes into the ESOP. And then after that, it's 50-50 between ESOP and 401k. We have averaged 15% over the last 20 years that we have put in people's retirement plan tied to our financial results, the lowest being 9%. And the highest being 18% over that time frame. So people have built a lot of wealth that really it's deferred, right? So it's not in the sense that it's in retirement plans, but it's their money. They're vested in that money, and it reminds them. We remind them always that, look, this is the wealth that you're building by making decisions over the long term. But and then every time I go out and talk to people, we do town halls every quarter. We do town halls after our earnings call, and we open it up for Q&A for an hour. And pretty much we have probably about a 20 or 30-minute planned presentation on different topics, as well as our results. But then we open it up for 20 or 30 minutes of questions that they can ask. And then I go out, as does my COO and some others, and spend time with them out in their offices and try so anytime I travel to an office, so a perfect example, in New York, I go to New York probably 4 times a year for different investor conferences. We have an office in New York. Some, they're on a flex schedule too. They're not always there, but I let them know I'm in New York. And I always make a point that if I'm in a town where we have an office, or if I'm in a town that's close to where we have an office, I'm going to be purposeful about getting into the office. And if I can, I'm going to try to go out and either take them to lunch or take them to dinner. And not only am I going to invite the people that are in the office, but also the people that work within a certain, let's say 20-mile radius of the office, that it's reasonable that they can get there for dinner or lunch, and let them know I'm coming in. I hold a kind of an informal town hall, Q&A, talk to them about how the company's doing, talk to them about, how important our culture is. And those type of things just continue to reinforce and build personal relationships with people, and feel like they have access, and it's okay to raise their hand because they've met the CEO, they've met the COO, they know who they are, they've broke bread with them, they sat next to them at dinner. They're real people. They don't have huge egos. They're willing to listen. They're approachable. Those type of things I think are critically important for our success, but also to continue to get people acclimated to a new culture. But the managers have to make sure they do it on a day-to-day basis. So I can only do it on an occasion, because I'm not going to see them every day or talk to them every day.
So, RLI is 60 years old, and I can say this is someone who's hit that benchmark. Like, well, at 60, stuff starts slowing down in most cases. So, and a lot of companies at your age as a company really kind of lose the drive, lose the impetus for growth, lose the oomph for continuous improvement. And how, is that something you worry about? Do you think the culture of RLI means it's, kind of a self-sustaining machine? How do you think about that as kind of maintaining that impetus and drive and willingness to, take prudent risks for growth?
I mean, I think we've evolved before. I mean, you mentioned at the very outset that we were a contact lens company, and as that business was starting to fade because technology was taking over with soft contact lenses and then disposable contact lenses, that Jerry had enough foresight to see that if he didn't evolve, he was not going to be around. And I think we constantly come with that mindset. We remind people that RLI, which stood originally for replacement lens insurance, it now stands for if you don't change, you die, right? If you don't evolve, you die. And I think, by the way, also someone who have hit that milestone of 60, I do realize that you have to continuously learn. You have to continuously be open to things. The things that worked before are not necessarily going to be the things that work for the future. You have to evolve your business model. You have to have, you have to put the hubris in check. You have to be, you have to be mindful enough to know that you have to continue to invest in the future. And investing in the future is not just technology, but it could be investing in new people, the next generation of people that think differently because they're going to serve the customers of the future. And their voice matters because they are better at things than I am at certain things, right? I've built relationships that maybe they haven't built yet, but they are probably a lot more open to technology and how technology can make us better and make the customer experience better. I think the other thing we have to be mindful of as an insurance industry now is that it's no longer my direct competitors that are setting the bar for some of these things. It's our customers' experiences with other companies, whether it be Amazon or Uber or whatever. They're asking the same questions that, of us now, of our industry. So of why can't the experience be more like that? And why can't I get this information faster? Why can't I why is there not more transparency in what's being done? Now, there's a balance there because we think that in our industry, there's, it's not a commodity. We do not sell a commodity. There are values. There are services and things that we do better than others. We can handle claims better, which, by the way, at the end of the day, if you do a better job with claims, you can save your customer money. Whether they insure with you or they go choose to shop next time, the loss experience they have is going to be lower, and therefore they'll get a better deal. There's certain coverages that they may not want to provide or extend to vendors of theirs that other people do because maybe that vendor should be buying their own products or their own coverage for that, and you shouldn't be extending your coverage because if you're paying for it, that means your premium is going to be more expensive than it would have been otherwise. But it's important to make sure you're differentiating products, and particularly in the specialty space. I think it's more acknowledged that it's not a commodity, but you have to continue to balance the investment in technology with building personal relationships and explaining the extra value that you're adding. But we do realize that there are people out there that look at RLI and they're wanting to copy us. They're wanting to figure out how do we get those type of results? How do we get that type of performance? How do we get our employees to be so energized by being at a company like this? Because you put that up, but and they're trying to emulate us. They're trying to copy us. So we know we're always looking over our shoulder, thinking, well, who's trying to get up to where we're at? And if we don't continue to move ahead, they're going to get here. They're going to get better too. So if we don't continuously get better, we're not going to stay ahead. And I think, again, wrapped in the ownership culture, when you're an owner, you're always thinking about the future, right? You're always thinking about how do I get better? Because if I'm selling, today, but if I got to be thinking about what's changing with my customer, right? How is my customer evolving? How are their needs for insurance products changing? How is their need to interact with me changing? Doing business with me? How's my producer my distribution partner that's distributing my product? What am I doing to help them sell our product? Because a lot of times, at the end of the day, the customer doesn't really understand some of the specialty products they need to buy, and they really count on that trusted advisor, their distribution partner or producer that isn't they're an agent for us, but they're not necessarily they're working for the customer, trying to get the best deal, the best value. So you've got to arm them with information of why we're a better value, even if we're more expensive, right? Just like the salesperson at Lexus has to explain why you should buy a Lexus versus the Toyota dealership that's across the street, because the Lexus has other things, right? Better value. It's a better value. It's either higher quality or they have other service, or they're focused on certain things that are worth the extra cost. That's the type of stuff we have to arm our salespeople with, so that they could sell our product over someone else's. So I feel like there's a lot of interest in making us better every day. We remind people constantly that we have to get better every day. We feel like we were handed a lot of good core foundational values and business model, And, to that which much is given, much is expected. And I tell people every day, your job is to wake up in the morning and figure out how to make us better, how to make us more efficient, how to make the customer experience better, how to make us more profitable, how to reduce expenses, and raise your hand if you have ideas. So, I mean, we invest a lot. All my speeches are about that. Leave it better than you found it, and you found it in a pretty good place. I say that a lot. And so we set the expectation, and they know that if we don't continue to get better, the value of the stock goes up as we provide more value to our customer and are able to make more profits for our shareholders, which they're one, obviously. That alignment is very critical. So, and I think it drives a lot of behavior in our organization.
Well, Craig, you have, as they say, stuck the landing. That was a perfect note to end on. And I just love this, kind of reflecting on this story, that the point you made about RLI, the name being a reminder that if you're not constantly evolving and growing, you go extinct, and building that in as a motive force to keep people continuously improving and taking prudent risks, and of course being rewarded as owners. But again, thank you so much. It's just such a terrific story.
I would just add, if I could just add one last thing. So I tell you, the most satisfying thing I get, we have this retirement ceremony and recognition banquet every year, and I mentioned it earlier in thing, but there's nothing more rewarding than after I give the final speech and close, I have family members there with our employees, and they will come up to me. And the thing that's most touching to me is they will tell me, and I've heard this, if I have heard it 6 times, I've heard it 60 times. I wish I would have found RLI so much earlier in my career.
Huh.
And that makes me feel very good. And a lot of times it doesn't come from the employee. It'll come from the family member of the employee, because it's allowed them to pay for their kids' college education. It's allowed them to retire earlier than they would before, or created some financial safety net for them. And that's a very rewarding thing. And I think Jerry Stephens was very proud of what he had built. He should be very proud. And we feel very fortunate being part of this culture. So,
And being one of the people that's found something great and is leaving it even better. So,
I hope so.
Craig, thank you again. Absolute, a great story, and a delight to chat.
All right. Thank you, Don. Thank you, Charlie.
Thanks, Greg.
Appreciate it.